Hey everyone, welcome back to Corporate Decoder, the place where we dig through corporate filings so you don't have to. Today we're diving into a report from Nordstrom, and let me tell you, it's a bit like finding a slightly marked down designer item in the clearance rack, unexpected twists and turns. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss this filing and others. This is a Form 8K, a current report companies file to announce major events. In this case, it's Nordstrom giving updates on its planned merger and some legal challenges that have popped up. Basically, someone is trying to sue them. Scrollers of report. Date of earliest event reported. Ticks May 9, 2025. The date of the report is May 9, 2025, so it is quite recent. The earliest event was also that day. So what's going on? Back in December of 2024, Nordstrom agreed to be bought by Norse Holdings. It's a pretty standard merger agreement where another company would buy Nordstrom and it would become a part of the parent company. The date of the meeting for shareholders to vote on this acquisition is scheduled for May 16, 2025. Scroll as previously disclosed in the definitive proxy statement. Scroll. Now, things get a little more complicated. A shareholder has filed a class action lawsuit, meaning that they believe a large number of shareholders were damaged, claiming the merger isn't fair. It's like finding a stain on that designer item you thought was a steal. Scroll the proposed merger, which is set forth below under the heading Supplementary Ever Disclosures in response to the shareholder letters. Scroll for top of that. Nordstrom received a bunch of letters from shareholders, 15 to be precise, complaining about missing information in their initial explanation of the deal. Nordstrom doesn't think they messed up, but just to avoid any problems or delays, they're adding some extra details. Let's dive into this lawsuit, Gilbert versus Nordstrom. This shareholder is saying the deal violates Washington state law because it doesn't require approval from a large chunk of shareholders, specifically 2/3, not counting the shares already owned by the people buying Nordstrom. The shareholder wants a court to stop the deal unless this happens. The shareholder also alleges that everyone involved messed up, failed their duty, and breached their duties in making the deal. Scroll on April 4, 2025. The plaintiff filed an ex parte motion for Greek. The shareholder wanted the court to speed things up, demanding documents and answers quickly. Nordstrom fought back, and the court actually denied the request to speed things up. So a win for Nordstrom on that front. But the shareholder is still pushing. They asked the court to delay the shareholder vote until Nordstrom releases more information, specifically stating that the deal needs 2/3 approval from unaffiliated shareholders. Those are the people who are not buying Nordstrom. They also wanted the court to block the merger if they don't get that 2/3 vote. Scroll on April 25, 2025. Nordstrom and the independent ECR rectors filed their opposition to the plaintiff's motion for preliminary injunction. Scroll to Nordstrom's side, including some independent directors, said no way to this request. A few people gave some declarations or sworn statements to support the case and explain why they thought the deal was a good idea. Scroll on May 6, 2025. The court entered an order to denying plaintiff's motion for preliminary injunction. Scroll Collision News for Nordstrom. The court sided with them and denied the shareholders' request to put a hold on things. Now let's get to those supplementary disclosures, the extra information Nordstrom is adding to keep everyone happy. This section is all about the financial advice Nordstrom received when deciding to sell. Scroll public trading to comparables analysis, December projections. Scroll keep here. Nordstrom is sharing how their financial advisor, Morgan Stanley, compared them to similar companies. They looked at things like earnings before interest, taxes, depreciation, and amortization, or EBITDA, which is a fancy way of saying profit before a bunch of expenses. Morgan Stanley figured out a range of values for Nordstrom's stock based on these comparisons. It takes into account $17.9 billion in net debt. Scroll discounted quit equity value analysis, December projections. Scroll Crefton Morgan Stanley also did a discount equity value analysis. It's like looking into a crystal ball. They estimated Nordstrom's future profits and then worked backward to figure out what the company is worth today. Again, they looked at EBITDA and factored in debt, about $1.44 billion in debt, and divided by those 170.9 million shares. Scroll discounted after cash flow analysis, December projections. Scroll kid. They also used a discount cash flow analysis. It's similar to the last one, but focuses on the actual cash the company is expected to generate. They took into account the $229 billion in debt and divided by the same amount of shares. Scroll equity research, scroll analyst price targets grew. Spug and Morgan Stanley checked what other experts called equity research analysts were saying about Nordstrom's stock price. The price targets range from $14.5510 to $20 per share. The mean price target was $22.2065. The mean is the average. Scroll public trading, cross-A comparables, analysis, street projections, scroll cap. They compared Nordstrom to other similar companies. They took into account the 17.49 million shares, a debt of 2.29 billion. Scroll discounted quid equity, value analysis, street projections, since Scroll, close to Morgan Stanley, also did another discounted equity value analysis. They factored in the 17.4 billion, Foldsam 4 billion. Scroll selected public chemical company analysis to the special commit. Scroll, another financial advisor, Centerview, did their own analysis. They used a similar method, comparing Nordstrom to other companies and looking at EBITDA. Centerview is taking into account 170.49 million in debt. Scroll discounted cash flow analysis and once again considered 17.49 million in debt. Centerview looked at what analysts were predicting for Nordstrom's stock price, and the range was from $14.50 to $20 per share, with the mean being $22.65 fell. Nordstrom is sharing some internal predictions about the future. The company said they would have a sales growth from 1 to 3%. They also said gross margins would improve. Gross margin is the percentage of revenue that exceeds the cost of goods. Variable expenses would hold steady. 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 Variable expenses were the way steady as well. They also plan to open 2025 and 2026. They adjusted their projections a bit in August of 2024. Credit card revenues were slightly lowered. They also said they would open 23 new stores in 2025 to 2028. Alright, that was a lot to unpack. Basically, Nordstrom is getting bought. Someone is trying to sue them over it, and they're adding extra information to try and keep everyone happy. Now, looking at these events, what do we make of it? Nordstrom is facing a bit of a bumpy road to this merger. The lawsuit and shareholder letters suggest some people aren't completely on board with the deal, or at least want more information. The court seems to be leaning in Nordstrom's favour for now, but these things can change. The financial analysis is interesting. It looks like the experts have given Nordstrom a range of values, and the sale is within that range. One potential risk is, what if the deal falls through? Nordstrom's stock price could take a hit if the merger doesn't happen. The company is also dealing with increased competition from online retailers and changing consumer tastes, but they're trying to adapt by opening more rack stores and focusing on their online business. Overall, the sale seems like a reasonable move for Nordstrom. It provides them with much needed capital and potentially a fresh start under new ownership. Alright, that's our breakdown of Nordstrom's latest report. What's your take on these events and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.